Common misconception that many employers or small business owners have is regarding payroll. Payroll is not simply giving a check to an employee or a worker. Payroll consists of withholding taxes from an employee's check, paying those taxes to the proper agencies such as the IRS, or in the state of Illinois, the Illinois Department of Revenue, as well as the unemployment agencies. Then you must prepare all the tax filings and then ultimately file those tax filings with each corresponding agency. In setting up payroll, there's multiple steps you must do in order to accurately and proficiently set up the payroll system. Most of the time, it starts with retrieving the documentation from your employees. The documentation you need to retrieve from your employees is a signed Form W-4, which is the federal withholding form, a state withholding form. In the case of Illinois, it's Form Illinois W-4. You should also have each employee fill out the federal Form I-9, which is the employment verification form, and just retain that for your records. The withholding forms will indicate the number of allowances and the amount of withholding to be withheld from your employee's paycheck. So once you have an employee's payroll, their gross wages, you then need to deduct or withhold the federal withholding, the Social Security, the Medicare, and the state withholding amounts from your employees' paychecks, which you are then liable to pay. The federal withholding amounts are based on the tax tables that you need to retrieve from the Form W-4. The Form W-4 will show you the amount of allowances and the marital status of your employee. From there, you can then determine how much federal withholding you should withhold from each pay period. The Social Security and Medicare are fixed percentages. Social Security is 6.2%, the Medicare is 1.45%. The state withholding is generally a 5% with deduction or withholding unless your employee has different allowance structures. If they're married or if they claim more allowances, that 5% will change. Federal withholding, Social Security, and Medicare are the taxes that are known as the federal tax deposit. However, you cannot just take the federal withholding, Social Security, and Medicare amounts off your employee's paycheck and determine them as the federal tax deposit. As an employer, you are also responsible for matching the Social Security and Medicare. So in order to have a proper federal tax deposit, you must add in the federal withholding from your employee's paycheck, the Social Security from your employee's paycheck, the Medicare from your employee's paycheck, also the Social Security from the employer portion, and the Medicare from the employer's portion. Those 5 amounts will give you what is known as a federal tax deposit, which is what you can then pay through the EFTPS.gov website. After you've paid the federal tax deposit, you still need to pay the state withholding. And in Illinois, you do that through the mytaxillinois.gov website. This one's pretty straightforward. You take the state withholding off your employee's paycheck, add in any other state withholdings from the other employees from Illinois. Once those are added together, you make that payment through the mytaxillinois.gov. Now, if you think that this hasn't been complicated enough, just withholding and paying the taxes are not enough to have a proper payroll. You must still file what are known as payroll tax returns. These payroll tax returns can be filed on a quarterly or an annual basis. The small businesses that file in a quarterly fashion will file the forms 941, Illinois 940, and UI 340. Now, the forms I'm about to explain are actually for the federal forms and the state of Illinois. Each state will have their own form, but for our purposes, I will explain the Illinois. The federal form 941 is the form that reconciles your federal tax deposit you made either in a quarterly basis or monthly, and those payments are the federal withholding, the Social Security, and the Medicare amounts. So that form 941 will add all those amounts up, including federal withholding, Social Security, Medicare, in a way that you can report them to the government. Form Illinois 941 is the reconciliation of the quarter of the amount withheld from your employees and what was deposited or paid to the state of Illinois through the mytaxillinois.gov website. And then you have the form UI 340. UI 340 is the State of Illinois Unemployment Form. This form can either be filed on a quarterly basis by paper, or you can register it through the IDES Illinois TaxNet online and file and pay the return. So far we've talked about how to withhold taxes from your employee's paycheck, then how to pay those taxes, and also how to report those taxes on payroll tax returns. What we haven't talked about is how to set up payroll with the federal government and the state agencies. In order to set up payroll with the federal government, all you need to do is obtain a Federal Employer Identification Number, also known as an FEIN. Once you obtain this number, you can start to fill out your Form 941 or 944 and report the wages and taxes withheld. In order to set up payroll in a state, you must register with that state. So for registering in Illinois, you must fill out Form REG1 either by paper or online at the mytaxillinois.gov website. In order to start your unemployment account or to set up the unemployment account in Illinois, you must fill out the Form UI1. In the state of Illinois, you would not be done filing forms. Every employer is still required to file forms W-3 and W-2s. The W-2 form is a reconciliation of all the payments and taxes you withheld from your employee's paychecks so they can file their income taxes. Form W-3 is then a reconciliation of all the W-2s that you file. So the W-3s should match up with your payroll reports as the total amount of wages paid out and the total amount of taxes withheld, whereas the Form W-2 should be the total amount of wages paid to a particular employee. Not only will you need to fill out and provide the Form W-2s to each employee, you'll also have to provide them to the Social Security Administration at the end of the year. If you have not listened to a word I've said, I urge you to listen closely to this last important topic. Employers are not to treat an employee as a subcontractor. Employees are paid with taxes taken out of their paycheck. A subcontractor is paid with a straight check. An employee has regular hours, is supervised, is paid on a regular basis, and is told how to perform a job. Whereas a subcontractor does not have regular hours, is not supervised, and is not paid on a regular basis. An employer is ultimately responsible to withhold the taxes from an employee's paycheck. If an employer chooses to treat an employee as a subcontractor, that employer is then accountable for any of the back taxes that employee has not had withheld from those checks. I urge you not to pay an employee as a subcontractor, as you are the one held liable, even if you have a signed agreement with your employee. As you can tell, payroll is not something you can just wing. If you decide that payroll is not for you, or if you decide that you would like to learn more about payroll, give me a call and I can explain the different options we have available for you.